All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time. It is Tuesday, September 20th. Let's go ahead and get started. Dow futures down about 181 points, NASDAQ down about 78, S&P 500 futures down about 0.63%, 38.92, Russell at 1808, down 0.62 percent this morning, 0.64. Crude oil up about 0.34%, 85.68. Again, still kind of hovering around 85, 90. Let's see, gasoline futures are up 1.5%. Natural gas 0.17%. Gold continues to sink with a stronger dollar, 16.75. I mean, this is the environment where gold should shine, pardon the pun. But again, the dollar is hurting. Silver 0.51% to the downside. Copper futures $3.51. That's pretty flat. Let's see, Bitcoin 19,000 80 exactly 19,080. Ethereum 1348. That's down about 1%. Euro dollar down about 51 pips, 99.73 below parity, and dollar yen 143.70 continues to go higher, up 50 pips. 10-year Treasury, we'll go over there here in a second, 3.56%. That's the highest since 2010. I have the chart here. The dollar index, still within range, still kind of range bound between 110 and 109.40, let's call it. Still above that yellow line there. And we'll see the VIX 3.22%, 26.59 currently. Let's go ahead and pull up S&P futures and take a look here, at least on the hourly. If you asked about NVIDIA, I forget who asked about NVIDIA yesterday, but we caught that yesterday, so well done. I had some SPY calls for yesterday expiry. They did not work out, obviously. I also had puts as well. I just wanted to see what happens if I short right around below 3,900. And those didn't work either. I did that personally just to see. So there you go. The sacrifice for the market to go higher yesterday. In terms of the S&P 500 futures, right on the 50-day moving average on the hourly, 3,900 is a big level, possibly a gamma level. That's a big market maker level. Again, where you have all the volume just kind of centered at one level, 3,900. We had a nice pop overnight. We got as high as around 39.33, and then we basically gave that back. Let's go ahead and kind of zoom out to the daily, kind of give us a little more of a view here. So 3,900, again, you can see this trend line. Just to get back to that trend line gets us around 39.63. That seems to be kind of the level that we're looking for, at least for a target. But again, 3,900, I put that in orange. That's the key line we're looking for. Again, we've broken below it, just like we broke below it, what, last week? 38.83. Could this be a bear trap as well? Again, you see a couple of levels where that 3,900 has shown us at least some kind of a sore job or at least some kind of rally back in July 19th. Once we broke that, we went from 3,900 to around 43.22 for about, what, 400 points. Then we came back down, tested 3,900, 38.97, all the way to the high of 41.76. We're now near 3,900. It could be just the buy, kind of sell the rumor, sell the news, sell the rumor ahead of the Fed event. Again, we still expect 75 basis point hike on Wednesday. We will be on. I will do a aftermarket video on Wednesday. I haven't done an aftermarket recap lately, so I'll do one on Wednesday. So we'll answer some questions regarding the Fed and what to do, what we're looking for moving forward. The expectation is 75. 50 basis points is possible, very slim chance, but 100 is right around 25% chance. We talked about that yesterday. Let's go and take a look at the 10-year yield together. Again, completely moving higher, breaking out 3 point, and that's going to hurt equities. We talked about that yesterday. Let's go ahead and bring up the weekly, and you could see 2010 was really the last time we were at levels like this, right until the end of 2010. So again, 4% seems to be a key level. The 2-year is right near 4%. Again, we need treasury yields to cool off a bit if we want equities to rise. The Fed could change that narrative if maybe they're a little less hawkish than expected. Maybe there is some peak hawkishness. That remains to be seen. Let's go and bring up the dollar. Again, bring this up all the time. That yellow trend line, we're above it. If we can get below maybe 109.41, that'd be a great sign. And maybe we could start testing 106.20 or something. And maybe that could give us a little more room to the upside on equities. Again, the dollar and the yields are in focus pretty much every day moving forward. Let's bring up crude together. And in regards to crude, let's bring up the daily. You could see just really just holding on for dear life at that 85 level. There was some news this morning. Here is the news. I'll bring it up here. Reportedly, at a recent SCO summit, several leaders, including Turkish President Erdogan, told Putin that Ukraine war must be ended. Putin, according to these sources, reacted to these proposals in a quote, very conflicting way. Again, kind of hard to predict what President Putin will do. This is another thing here. It says traders circulating unverified reports that Russian Telegram channels that Russia President Putin plans to make a national address this evening. Could this be maybe a pullout of Ukraine? How great would that be to get that out of the way? Maybe get back to supply chains, natural gas, right in time for the winter in Europe. I mean, wouldn't that be just what the doctor ordered? Wouldn't that kind of mix up or try to get us directly with that seasonal rally that we've been talking about for a while, where we had the summertime rally, then we had the September fall, and then October being seasonally, we go up on a midterm election. Could that be it? That remains to be seen. We'll go ahead and cross our fingers, hope for peace, hope for the best, obviously. Let's see here. U.S. building permits. That was less than expected, 1,517,000. 1,604,000 was the estimate previous. So again, down building permits 10% month over month. U.S. housing starts beat 1.575 million new housing starts versus 1.45. Housing starts month over month up 12.2%, even with these high interest rates. So imagine that. I think I saw the interest rate on a 30-year right around 6.3. That's pretty crazy. I locked in mine right around 2.87 back in last year in 2021, right around April. So I got very lucky. I timed that pretty well. But that's where we are. Again, it looks like real estate. There is some kind of, at least some demand crimping, at least in the Austin market that I read, Orlando market that I read. But for the most part, you still see at least some kind of demand from the home builders and people who are looking for homes, even at these high rates. Interesting stuff, at least to see. Real estate is something to really look at moving forward, because real estate really is a big part of the economy. When you buy a home, you got to buy appliances, you want to hire people to mow the lawn, or you buy a lawnmower, all this extra stuff that you do when you buy a home. Again, that provides a lot of jobs. It provides a lot of commerce to our economy, especially in a local level, especially with property taxes for the city. They live off that. Police officers, firefighters, that's important. If you guys remember in 2008, 2009, how many foreclosures, how many budgets were cut between the cities, how many issues did they have paying back their debts, municipalities, a lot of municipal bond owners that were hurt during 2009 because they don't have the taxpayers and the tax base on those homes. So when you have foreclosures in homes or people, not paying their mortgage, again, that is a ripple effect. So when does the interest rate market or bond yields break something where we actually get a Fed pivot? It's kind of like we want bad news to happen as quick as possible so we can be bullish, or we just want that soft landing, everything's going to be okay. That's really where we are. Let's answer some questions. Morning, Carlos. Thoughts on Apple calls for this week? I wanted to fill Apple yesterday, and I did not. So 155 was my target. Let's take a look at it. We had this bounce. We broke above the 50-day. It faded, so I'm kind of glad we didn't get into it. But again, I'm watching Apple very closely. 155 is my target. I just didn't get a fill. I even had a limit order yesterday to send out the Apple trade. It just didn't come through because we had that big boost to the end of the day. So maybe we'll take a look at it, John, today and see what we can get in regards to Apple. Good morning, Carlos. Thoughts on NFG long term? I don't know what that is. Let's see what the stock is. NFG is National Fuel Gas Company, pays a 2.6 yield. So I just saw that. Let's go ahead and bring up the chart together. Okay, so this is National Fuel Oil Diversified Energy Company with 6.2 billion in assets. The yield is not too high, at least not. Taking a look at their financials, margin was a little down, but revenue, income, EPS all up. But they did beat on the EPS, but they missed on revenue. So let's bring up the chart here. Again, just kind of very similar to CVX, a Chevron, a stock that I do own. Not a lot of edge here. Again, if you want to be long energy, not bad idea at all. because they are still holding up even as the commodity itself, crude oil or natural gas, is kind of being a little volatile. But I think this is a hold on NFG. Just looking at the chart and looking at some of their financials, I think it's a hold. If you're looking to possibly buy some more, tough sledding, you have to look for around 65, maybe a $5 move or something to add some more. Best bet on that one, again, if you like it, Valerie, just dollar cost average it over time. Add a couple of shares over time, maybe every month, a couple of weeks. You just throw a couple of bucks in NFG, so you don't have to worry about actually timing the stock and just getting into the stock that you want. Amazon 125 calls Friday, should we hold? I do have those calls. That was the same with NVIDIA yesterday. And you could see here on the daily that we're still above this here, this wedge here. And again, this trend line, that 100-day on the daily, that's really what I'm looking for. We're still holding above. So again, it is still a hold. I think that we're going to get that trade as well. So I do like Amazon, just like NVIDIA yesterday. NVIDIA popped in the morning. We caught that first thing. So well done, team. So we'll keep an eye on it, Conrad. Congratulations to all the masterclass fantasy football winners last week. I lost by what, 6 points? Cleveland Browns defense let me down last week. Was it who was on my team that was great? I forget. Yeah, my opponent had Jalen Waddle, and I had what's his name? Oh God, the name just kind of just went away from me. He plays. He was my MVP this week, and you would think I would know who the hell I have on my team. Tyreek Hill. God, of course I know Tyreek Hill. Tyreek Hill was on my team, but Cleveland Browns killed me. So great games last night. Bills look really, really scary if you're an NFL fan. Eagles look really, really good, and I hate that. I hate the Eagles. I'm a Cowboys fan, but that's where we are. So this today, again, we had a nice boost at the end of the day yesterday. I still think we go a little higher into the Fed event. And I'm just going to say it. I know nothing new. I still think that the Fed will get us in position where we fall a little more towards the end of the month, and then we'll get a bounce in October based on seasonality. Now, again, I don't use a magic 8 ball. We just have to see on technicals. Again, that 3,900 level is very, very key. 3,950, that trend line right here, that should be my target. Let's see if we get there. Have a great rest of your morning, guys. I will catch you guys tomorrow for the morning note, and tomorrow after at 5 p.m. for the Fed breakdown or debriefing. We'll see where we go from there. So I'll see you twice tomorrow. Have a great rest of your morning. I will see you then. Cheers, guys.